Good morning. This is Larry McMillan with a stock market update on Monday, June 5th. Well, we finally got the upside breakout over 4,200, and it has been confirmed by closing there for 2 consecutive days. So that's bullish enough to turn the SPX chart bullish, and therefore to have speculators retain a core bullish position, at least for the time being. The next target is 4,300 on the upside, which is last August highs. And then if we can get above that, there's quite a bit of free room above there. A failure would be a fallback into like 4150 area, something like that. That would be pretty disappointing. It's happened, recently in the last 18 months a couple of times. So it's not completely out of the question. But right now, it does seem from not only the SPX chart, but other indicators that the upside has the favorable hand, at least at the minute. The equity-only put-call ratios are on buy signals. They are dropping, and so as long as that continues to be the case, that's bullish. The one ratio, the weighted ratio, is already in overbought territory. But as we always say, overbought does not mean sell. So a bullish move that gets overbought can stay that way for quite a while. The standard put-call ratio is also bullish, of course, but it is not yet in overbought territory. Breadth has been strong the last couple of days, and the breadth oscillators are already getting overbought. That's usually a positive sign if we have a breakout by S&P that's accompanied by an overbought breadth oscillator condition. That just means the market is expanding along with the rally. You may have some question about that because there certainly has been a big disparity between, say, AI and related tech stocks and the rest of the market. So those tech stocks are carrying the market right now. It's not usually a great thing if only a small number of stocks are driving the market higher. So an expansion in breadth here would be a very positive thing for the bullish case. New highs on Friday did outnumber new lows, but not by enough to give us a buy signal from that indicator. VIX plunged to below 15. So this is the first time it's been this low since February of 2020, right before the pandemic crisis occurred. And that's, a bit depressing for volatility sellers, probably even volatility traders, but it is reflective of the fact that this bull market is strong and is driving VIX lower. As long as VIX continues in its downtrend, that's bullish for stocks. It would only be negative if VIX jumped up by 3 points or more. The construct of volatility derivatives, which is basically the term structure of the futures and of the CBOE volatility indices, that remains bullish for stocks as well. So overall, we are holding this core bullish position. We will trade other signals around it as they occur. At the current time, though, there are no sell signals. There are a few overbought conditions that could become sell signals, but we don't anticipate those. We just wait for confirmation of a signal like that. Meanwhile, I invite you to visit our website and take a look at what we have to offer there. And otherwise, have a great week trading.